Thank you for joining us today. Today's webinar is Reduce Uncertainty and Manage Risk in Your Investment Portfolio. My name is Teresa Fries, Senior Marketing Director for SunGard's Insurance Business, and your host for today's presentation. On the agenda today, we will start with our guest speaker, Sam Suckle of CEB Tower Group. Sam will share up-to-date trends in business intelligence and analytics. John Versolino, Vice President of Product Management for SunGard's Insurance Business, will then discuss the demand for business intelligence and analytics today and explore how business intelligence is taking shape at SunGard. We'll then have Greg Wheeler, Solutions Specialist at SunGard, share a true-to-life example of how powerful information can be when presented in the right manner. Our end goal today is that you walk away with a better understanding of how business intelligence can help you reduce uncertainty and more actively manage risk in your investment portfolio. At this time, it is my pleasure to introduce you to today's guest speaker, Sam Suckle. Sam is Research Director in the Insurance Practice at Tower Group. His research focuses on how technology supports the distribution and servicing primarily around life and annuity products, including actuarial, policy administration and illustration systems, and customer relationship management automation. Sam has more than 20 years of insurance industry experience in operations, financial management, procurement, and sourcing. Please join me in welcoming Sam Suckle. Sam?
Well, thank you very much, Teresa. And I'm looking forward to talking to everybody about business trends that are ongoing, business priorities and technology strategies, in particular in insurance. My focus at CEB Tower Group is primarily life and annuity, but I also have some interest in business management technologies that cover all range of products, including property, casualty, and health, but very much at a high level. So today we'll start with an update on the latest business priorities and strategies for insurers who all share a common need to manage capital and grow investment earnings. So here's our roadmap for today. We'll start by talking about the business drivers, then we'll review some of today's top technology priorities, and lastly, we'll discuss budgetary items as a lead-in to the next section of the presentation from John Versolino. So one of the biggest macroeconomic drivers impacting insurers today is the increasing interdependence and volatility of the global economy. No surprise if you follow the stock market nowadays. But this impacts insurers in a number of ways. It can impact them directly in the demand for products like business interruption insurance. But in the background, it also impacts their supply chains. And in fact, all businesses' supply chains are going to have some issues. And we have a little bit of a detail of that impact on the bottom here. So on the bottom, you can see that when there were floods in Thailand in 2011, it actually decreased their manufacturing output, including computer equipment and technology, and so it actually had an impact on U.S. businesses, including everybody that buys computers, as well as specific manufacturers like auto. So there is this impact of economic interdependence that we haven't seen as strongly as we do today. And at the top, you can actually see this detailed in data between the fluctuations in gross domestic product for advanced economies as well as the emerging and developing ones. While they're at different levels, you can see that they very much follow the same pattern. So people are beginning to march in lockstep economically across the globe. Next slide, please. There's another challenge for insurers, volatile capital markets. So all of this interdependence means that an event that maybe 20 or 25 years ago, say issues in the stock market in Greece, would not have an impact. Today they do have an impact. And we actually see that in a volatility index called the VIX, which is traded at the Chicago Board of Options. And in the past, it's averaged around 19. Historically, the past decade, it's been closer to 23. And in fact, while it pops up and down, it's been as high as 30 in October of this year. So there's definitely a bigger amount of stock market volatility. which is going to impact the investment management function of all companies, including insurers, and it's going to really boost the need for timely data and insight. Next slide, please. The other challenge is low interest rates. It's no surprise that in the U.S., the Federal Exchange has been priming the pump of the economy by keeping rates low, similar to other economies. And this creates a real problem for insurers, because what happens is if they've got historical guarantees from times when interest rates were high, a 3% annuity guarantee is shown in the flat line in this chart. And then if the rates go down quite a bit, as they have over the last few years, you end up actually losing money on those guarantees. So you put something out there that you thought was going to attract business, but you didn't realize it was going to become a loss leader. But in today's environment, you need to, recognize that, manage your portfolio effectively in response to that. And so again, this is going to heighten the need for good analytics and business intelligence, particularly in the investment function. Next slide, please. So the impact of this is what we see here with some data from the American Council of Life Insurers on the investment income and total income levels of life and annuity providers in the U.S. This chart is in millions of dollars, and what you see is on the bottom, the investment income, it's been relatively flat. Hate to use the term flat line, but it is going up very gradually, which makes sense given the conservative portfolios that insurers have to maintain and the low interest rate environment. At the top, we can see total income, which is also going to include sales revenues. No surprise that that dips after the 2008 fiscal crisis and then started ascending back to normalcy through 2012. 2013 started out very well before we saw a nosedive in the second half of the year, and 2014 has been sort of moderate to mediocre at best. So, there's a revenue challenge that insurers have to manage for. Next slide, please. In the next section, what we're going to review are the technology priorities that insurers are responding to, and this is based on CEB Tower Group Insurance's latest Insurance Agenda survey. Let's continue, please. So what we're finding, what our insurance customers and contacts are telling us, is that analytics basically, specifically getting your data ready for actionable analytics, whether it be around policy data, financial data, market data, investment data, that's their number one priority, followed by number two, preparing systems for regulatory requirements. And I'll do a little more in-depth analysis there. Number three is optimizing customer data, again, as insurers continue their long journey from being product-centric to customer-centric. But there's very much of a data-centric feel around here. And of course, that data is going to be the lifeblood for any business intelligence and analytics that's going to occur. So business intelligence tools will, they keep on getting refined, but they also need to get fed by the data that they consume. And so it's a top priority that we're seeing in the insurance space this year. Next slide, please. And on our next slide, what you'll see is the very unfortunate truth that insurance is a highly regulated industry. And here we sort of graphed it out, looking at the past, say 2012 all the way out through 2016. And we've also got a bit of a European flavor here with Solvency II. But for those of us who are very close to the insurance industry, you're all probably aware that in the U.S., insurance regulation has been left to the states since the McCarran-Ferguson Act of 1945. And then lo and behold, with Dodd-Frank, in response to the fiscal crisis in 2008, we've seen an increase in federal oversight in general in financial services and specific in insurance with this new Federal Insurance Office. What we're also seeing now is that companies, and you can see the second bubble from the left, the SIFI designation, or systemically important financial institution. So all of a sudden we've got insurance companies, say like MetLife and Prudential, that have been labeled too big to fail for the financial system. And of course, their need to manage capital and to apply a higher standard is going to be ratcheted up, and they're going to have those challenges. But what happens is, you'll see that regulatory restriction and around solvency start to continually raise higher as the regulators remain concerned, especially the state regulators, around what's going on with solvency. Conversely, along with the U.S., in Europe, Solvency II, the lighter blue bubble in the middle, just keeps, is another level that insurance companies seem to be able to handle. So the tying back of what their solvency capital ratios need to be, the minimum one and the advised one, versus what they're actually doing. Again, it demands a lot of analytics, particularly in the risk and investment space. Continuing on to the right, we're beginning to see here in the U.S. another companion regulation to Solvency II called ORSA, which is your own risk and solvency assessment, which is, again, adding more procedures around risk management, solvency, and your investment management function. Very similar, perhaps, to what very similar to what Sarbanes-Oxley did around accounting about 10 or 15 years ago. So you're definitely ratcheting up the need for information just to comply with these regulations. The final thing that you're going to see, and again, another regulation in the actuarial risk space that's going to increase the need for good business intelligence, is principle-based reserving. In a nutshell, it's a level of reserving and holding capital to pay your claims in insurance that relies much more on a company's actual experience and the data that represents. So you'll see that data then flow up through business intelligence applications, and the actuarial applications will need to use the same data and report on what's going on so that the company knows how to set their capital position to maintain their solvency. So if it seems like a lot of regulations, that's because it is. And even though insurance is not directly federally regulated, it is heavily regulated across the states. And this is a great example of it. And you can see that the flavor of what's going on abroad, particularly in Europe, is echoed here in the United States. Next slide, please. So when we asked our insurance customers what are the biggest drivers of strategy, it's no surprise that cost pressure and efficiency on the far left was a good measure ahead of the next elements. A lot of this relentless drumbeat of cost reduction happens because of the low interest rate environment. Certainly operational efficiency is very critical because we're seeing a higher level of customer expectations as well. If you think about it, you can buy something from Amazon.com and get it in 2 days, and they're looking at drones to get it even faster. Well, then why does it take me a week and a half to get a new insurance policy's hard copy in the mail? So those expectations are rising, and that's another thing that's going to tweak into the efficiency needs. Along with those things that are driving strategy, of course, the regulatory side that we just covered and the customer demand that we just mentioned, as well as agent and distributor demand, those are all big drivers of strategy. And so this is what we're seeing in the insurance industry today. The low-hanging fruit may have been taken away in cost efficiency, but it's still a big issue. Continuing on, please, what we'll talk about in our next slide are the fact that when it comes to the data that insurers are using, they're actually not as mature as they'd like to be, and very few of them, you can see this in the light blue layer at the top, very few of them are fully mature and optimized to where they'd like to be in terms of their reporting and analytics, their data strategy, their data quality, stewardship. So all of the things that go into good business intelligence, they're not where they want to be. A much larger section, over about a third, are quantitatively managed. But there are issues here that still need to be resolved. So if we talk about what the benefits are in our next slide, we can see that, there we go. Before we get to the benefits, let's just do a little more drill down on the analytic function. So we do see that the importance of analytics is not matching the confidence. So the little orange dots that you see are the confidence levels that our insurance customers express to us in terms of their analytics. But at the top, the importance was much higher than their confidence. So in what we've been hearing is, this is a combination of a number of things. It could be skills, it could be data attainability, it could be not having the right tools and business intelligence, or perhaps having multiple business intelligence tools across multiple lines. So you end up getting sort of a Tower of Babel cacophony effect of different folks doing things differently without standardization. If we move to our next slide, we'll hit the next section divider, where we're going to talk about the budgets and action items that are coming out of these findings and the trends that we're seeing. And if you go to the first slide, what we wanted to just show you here is that the respondents that we see, pretty good microcosm of the industry in that a good portion of the investment is still highly concentrated in the jumbo, the tier 1 and the tier 2 insurers that you see either in orange, light blue, dark gray, or gray. And so there is, a smaller group that are spending the bigger dollars, no surprise, if you know the way that insurance IT works. And in many ways, these larger firms are willing to take more chances, but they also still have more problems, lack of standardization, particularly multiple business intelligence applications and multiple lines that have different ways of managing data, so they don't have that data standard and stewardship that they'd like to across the enterprise. If we continue on, the good news in our next slide is that we are definitely seeing an increase, at least from our survey respondents, about IT budgets. If we look, we had survey data that showed us 40% of the firms were increasing their budgets. About a little under a third were no change, and around 14% were decreasing, with the remainder still having their budget in process and being developed. So the expenditures are finally beginning to loosen up after a number of years of fairly flat levels. And in a little while, we'll give you a polling question where you can tell us how things are at your firm. On the next slide, we do get a little more definite about, how spend correlates with other factors. And of course, it should be intuitively obvious, and the data points it out, that the older the system, the more risk there is, and perhaps maybe the more need to invest in updates. This is especially true on the far left when we talk about actuarial and financial systems, and on the far right where we talk about policy administration. So age correlates with risk, risk correlates with reinvestment. Next slide, please. So getting specific around analytics and business intelligence, it's no surprise that it's the hot ticket as insurers try to work smarter, not harder, to use an old cliche. And we're definitely seeing that in our spending data, with almost a half of insurers looking to increase their spending in analytics. A much smaller amount were at a flat level. We did see a few firms that were decreasing, and when we inquired on that, what they told us is that they had finished a number of big projects and thus were ratcheting down their spending, and we're going to go into where they're hoping to reap the benefits of those projects. A number of folks were still doing their 2015 budgets when we surveyed, but when we did ask the folks that were in that position where they were headed with business intelligence and analytics, the answer was we need to do more. So we would expect when the full results come out for early next year for 2015 budgets, that we'd see an even bigger amount of folks laying down additional bets on analytics and business intelligence. Next slide, please. We wanted to get a little specific here about portfolio management and risk analytics. It's a real big key for insurance companies, and it cuts across life and annuity, P&C, health, and any company that's got a big number of assets that they need to save to fulfill their promise to pay. So all insurers have this issue, and they want to manage their portfolio properly, and understand what the risks are through analytics. And so what we're seeing, at least the survey data that we had, shows us that 40% of them are actually adopting new systems around risk analytics and business intelligence, and 23% replacing, with about half of them standing still. But, 40% is a good take of the industry, and so a lot of the folks are definitely marching forward with analytics, business intelligence around the best way to manage your investment portfolio. So with that slide, I believe my contribution is complete, but I would like to send it off to John Versalino. But before we do that, I mentioned we had a polling slide, and if when you have a chance, please just fill in what's going on with your IT budget for analytics and business intelligence. Do you expect it to increase, decrease, stay flat? Please take a moment to tell us, and then we'll kick the rest of it, the remainder, off to John for additional information.
I see here that from the graph we do have a number of people saying that they're going to be increasing or keeping their investment in business intelligence analytics over 2014. So that'll be interesting to see how that turns out. We've been hearing a lot about this also, that people have this demand now that's being built up for analytics and so forth, and we're looking forward to seeing how that investment pays out over the next few years. So let's go ahead and go into my slides. There we go. So in today's market, as Sam was saying, chief investment officers, chief financial officers, they're looking for new ways to adapt to a changing regulatory and compliance environment. Sam mentioned that. We've seen it also in the questions that come in for our support and the interest in our systems. They're also looking to improve investment returns. 850 basis points decrease from 2008 to 2013 is a big drop, and people are really scrambling to find out ways to improve that. They're looking for ways to quantify, manage, and capitalize on financial investment risks and improve efficiency and profitability. But really, many today still have no way of knowing at any point in time how well they are complying with their state or NAIC statutes, maybe even not even with their own company policies. And that's a big, big issue that we're found among our client base. They have no real way of knowing at any point in time how well their investments are performing, and they have reams of data on hand. And Greg will talk about that a little later, but no way to effectively and efficiently retrieve that data and synthesize it for timely analysis. Next slide, please, Diane. So that builds up a case for business intelligence. In fact, our research has shown that 78% of firms have business intelligence at the top of their priority list. Why? Well, because 75% lack access to timely financial and compliance data. And in fact, 87% spend more time producing management reports than analyzing results. And if I could see your faces right now, I'm sure you'd be nodding, saying, yep, that's us. Next slide, please. So let's peel back the layers one more level. 40% of insurance companies continue to use spreadsheets to compile financial statements. And the reason being is that we found is that the tools that they have in place just aren't able to meet the demands that management, the market, regulatory agencies are putting in front of them. So how do they do that? They go to Excel. Second of all, 88% of insurance companies admit that human error is their primary concern with those spreadsheets. So now you've got yourself into a situation where you're relying on these spreadsheets, but you're afraid that you're introducing errors into it. You're not sure of the results. And then 70% of CFOs are using several different systems to manage compliance. And I imagine other things too. So there's no real centralized way to look at all the information in one spot, relying on all these disparate systems, spreadsheets, and so forth to put our results together. And no wonder we're not working as efficiently and as effectively as we possibly could. Next slide. research in our soon-to-be-published accounting and insurance study, we found that 60% of insurers said that enhanced reporting with business intelligence and improved automation of data feeds into the ledger are key improvement areas that are important to our company. But only half of the insurers feel that getting that information is fast and easy. Next slide, please. So that leads up to employing business intelligence. And the points that I mentioned earlier are the reasons why we're seeing growth and interest in BI. And there's a lot of different definitions of business intelligence out in the market. And the one that we have settled on here at SunGard ascribes to business intelligence is used to tools that can be used to extract, assemble, store, and access data to gain insights from that data. And the reason why is because your company's data is an important strategic asset that may not be being used to its utmost. And that data can help you make better business decisions, improving the efficiency, helping with your investment returns, compliance and regulatory points, all those 4 points I mentioned earlier in the presentation. So, next slide, please. So what do we do with this research? We gather these reports and then our own research and surveys we conducted with our own clients. Well, what we did was we started delivering business intelligence. We started applying business intelligence among all of our products in IWorks investments, in insurance. So at a strategic level, SunGard's been focused on delivering actionable intelligence to our clients in the most efficient and effective means possible. So that meant is that 18 months ago, we started on a project to provide enterprise-wide solution to BI analytics. And we started off by developing some dashboards that would deliver business-critical insights to our IWorks investments clients. And what did we do? Well, first of all, we did research, not only into what our clients were looking for, but also how are we going to deliver that? What sort of tool we're going to use? We evaluated 4 BI tools and settled on one that we felt would do the best job for us and our clients. We also researched how our clients were doing things such as measuring compliance with the states, with the NAIC and their own company guidelines, what sort of information they were looking to get from their accounting, what sort of risks were they taking on their investments, and then how well and how they're managing or measuring performance. We also knew that in today's world, we just couldn't offer it on the desktop. It had to be available anytime, anywhere, from a desktop, a laptop, a smartphone, or a tablet. And that's what we set out to do, is deliver this information enterprise-wide, mobile, as well as through a single platform. Next slide, please. So what we came up with was something called IWorks Enterprise Financials, and it's made up of 4 pieces: compliance, accounting, risk analysis, and then performance measurement. And as I mentioned earlier, it took us about 18 months to get to the point where we came up all at once. And people said, well, why did it take 18 months? I said, because we wanted to do it right. We also wanted to set this up so that we were able to deliver functionality, benefits of this, into our client base quicker rather than later. So instead of holding off on delivering everything at the end of the project, we decided to offer it incrementally. And because we felt that our clients could benefit from it, from those dashboards or portions of the dashboards quicker rather than later. And it also would help us better define and refine the functionality that we are offering. So starting off last year, last year we started off in like October, we offered compliance. And then compliance with the NAIC, state, and then company policy. In the beginning of this year, we offered the accounting dashboards, and also some improvements to the, the accounting dashboard, and with improvements to the compliance dashboards. In third quarter, we came up with risk analysis for the investments, and that incorporated some changes and improvements for the accounting as well as compliance. And then finally, in October, we launched the investment performance dashboards. Again, making some improvements on the other three pieces of the offering. Again, using a very incremental approach to this. Again, enterprise-wide, available over mobile, and on a single platform. So now that we've gotten that in place, it's out in the market and people are using it, what's next? Diane, next slide. As I mentioned before, our strategy is focused on an enterprise-wide delivery of business intelligence and analytics across all of our solutions, not only investments. And ultimately, it'll be delivered on a single platform with a single sign-on for access. So what that'll do is it will allow you to move from one solution to the next to analyze information that's most important to you at any one time. So enabling business intelligence on our investment accounting solution was the first step. And right now, we're focused on enabling BI across all of our financial systems. In the year ahead, we're going to be delivering on our financial accounting system, EAS, and it'll be out in the first quarter of 2015. So at this point, let me ask you some questions. Diane, next slide. And we're going to pull up a poll here. So we've discussed some of the biggest challenges and pain points that our customers have shared with us. And now I'd like to know from you, what are the biggest challenges you're facing currently and next year? Is it adapting to a changing regulatory and compliance environment, improving your investment returns, quantifying, managing, and capitalizing on financial and investment risks, improving efficiency and profitability, or none of the above? Improving investment returns seems to be the winner, and I think that's I've seen and heard this time and time again. Insurers are really struggling with improving the investment returns. The reinvestment rates are so low right now, and it's causing people to take risks or go into, I'll call it, alternative investments, alternatives that they maybe haven't been used to before. That could be anything from commodities, syndicated bank loans, structured securities, depending on what your company's appetite is for risk and so forth and what the policy is. So thanks so much for that, and let's go to the next slide, where we're going to go into an example that Greg Wheeler is going to talk about. And he's going to give us a real-life example, maybe one that you've experienced or are experiencing right now in your current job. But before we go into that, I just want to give you a glimpse of what we've delivered again once to date. One was we've created a series of 4 strategic dashboards that help you manage risk and compliance, monitor your investment activity and performance, and improve decision support. So with that, let me introduce Greg Wheeler. Greg is our solution specialist for SunGard Ira, and he is going to walk you through a real-life example of what people might be experiencing right now and perhaps how this solution might help them. Greg?
Okay, thank you for the introduction, John. Folks, what I'd like to do today is really just walk us through a real-world scenario, a sort of before and after of how today's insurers might prepare and analyze their data. And what we did is we took some feedback that we've learned from various insurance companies that we visited over time and learned some of the challenges that they have faced and compiled some of what we heard to create the following story. So as I go through this, maybe you'll recognize some of these challenges that this person faces, but in your business. So this is Sarah. So Sarah is preparing for her quarterly report to the board on the performance of the company's investment portfolio, and you can see sitting in front of Sarah are 4 very large binders that she uses to really get an idea and understanding of everything that's going on within the investment portfolio of her business. Now, like I said, we've been out to many clients who do it in this manner. They'll have a binder that's this thick for each quarter, and then in front of Sarah, you see there's 4 binders there, and that's really 1 year's worth of investment data that she needs to pull together every quarter, and which can be very cumbersome getting all of that data together. So in preparing for her board meeting, it took Sarah maybe 2 to 4 weeks time that she and her team and others in other departments spent gathering all of the required data from various resources, such as her custodians and investment managers and different accounting systems. And then the data had to be checked for accuracy, which is also a very manual and time-consuming process. Then, once all of that raw data was gathered and verified, it had to be consolidated into spreadsheets and these binders before Sarah could really even start reviewing the information that was gathered. And what she wants to do here is review the consolidated spreadsheets and these binders for compliance indicators. You know, is the company's portfolio compliant with the NAIC or her state of domicile, or even her own internal investment policies. And she wants to review the data to determine if the company made any money on their investments during the quarter. What were the gains and losses? So these are really just some of the high-level questions that Sarah starts with. Then she digs down into the details and really starts to analyze the data. And some of the questions she might ask herself are, you know, did we buy lower valued securities? Did the market tank or go up, and did that contribute to the portfolio's performance? Why is a particular investment out of compliance? Sarah discovers that there is an investment on the books that is out of compliance with the NAIC and her state of domicile, and with her own internal investment policy. But as she's preparing for this board meeting, time is very short. So she might want to investigate what happened here, why they fell out of compliance, and when that happened, and which security it was that caused that compliance issue. So she phones her investment manager, who is out of the office. So Sarah has to wait maybe another week before she gets an answer and a proposal to fix that compliance issue. But here's the thing, is she cannot go to the board without a plan. So Sarah needs to continue to analyze the data and come up with a plan if she doesn't hear back from her investment manager. She starts comparing the data, maybe period to period, quarter to quarter, and so on, so that she can investigate whether trends become evident. And of course, that means she has to bring up last quarter's binder so that she can compare the numbers to the previous report. So Sarah starts comparing the historical data to current quarter, and she asks herself some questions. Things like, am I realizing more or less income? Why? What are we doing differently? You know, maybe we were just lucky. Or did we make better calls on our investments? What risks did we take to achieve these results? And did we invest in lower grade securities to get there? Did we invest in alternative investments with higher yields and higher risks? Maybe she's asking, you know, that her investment manager provides performance indicators, but how can she verify the results? And really, the data aggregation process overall is very cumbersome and tedious. And we hear this from insurance clients, that there has to be a better way. And the good news here is that there is. And what I'd like to do is, that's sort of the before part of the story, and let's fast forward to today, where Sarah is able to make use of some of the business intelligence tools that SunGard offers. So here's what I'll do, is I'll start sharing my screen, and we'll take a quick look at the business intelligence tools, just a very high-level view of what Sarah would have available at her fingertips. So now, in order to prepare for her quarterly board meeting, she can simply access her investment accounting dashboard at any time. We will provide a unique URL and an ID and password for Sarah to access her data, and then she can immediately go straight to her performance dashboard, as you see here, where she can get a snapshot overview of how the entire investment portfolio is performing, but then she also has the opportunity to break it down into smaller groups and use filters so that she can investigate even down to the CUSIP level in some cases. What we see on this screen is really we get a picture of the total fund, but then we can break it down to equity and fixed income, and we can break it down further into different categories from here. But just to give you a brief idea, here's her total fund, total portfolio, and the rate of return that she got for the current month. She can compare that, and in this case we have a blended benchmark here where she can see exactly how her portfolio performed against that blended benchmark, or the S&P 500 for the equity portfolio, or Barclays Aggregate Bond Index for the fixed income portfolio. We have quite a few benchmarks that we can allow our clients to choose from to compare appropriately against each portion of the portfolio. Sarah can then go over to her compliance of her investments. She doesn't need to wait for her investment manager to investigate what's going on. And what we'll do is, because we have your investments housed in one location, all of your investments housed in one location, then we can take those investments and compare them to the varying rules to make sure that you are compliant. The NAIC model investment laws, for example, your state of domicile, and your internal investment policy. We compare those rules against your portfolio, and you can see here that we get an outcome. It's green if it's within compliance, it's red if it's out of compliance. But what we're hoping to help our clients do as well is really get an opportunity to monitor securities in this yellow or cautionary area, where they're getting close to being out of compliance, but they aren't yet. So now we can help our clients monitor those securities before they turn red. Let's investigate one of those rules real quickly. What I did is just simply click on the graphic on the screen, and it narrows down to that one red item, and it tells me what the rule is. But here I can drill down even further and get an idea of exactly which CUSIPs make up that rule. And the screen refreshes, and I can see exactly which CUSIPs make up that rule. I can immediately see how much I've gone over the threshold. And here's the limitation, by the way, 40% of statutory capital. 40% for her particular portfolio means $54 million, and so she can immediately see as well how much she is over that 54 million, or excuse me, that safety threshold. So 1.3 million that she would need to move out of this position in order to become compliant. But here's where that yellow part of that donut comes into play. Sarah can set this threshold to whatever she wants. Now, the rule in her investment policy is static, of course, but she can investigate any securities at any threshold that she determines that gets close to the limitation that is defined by the rule. So if she wants to have a little bit of additional elbow room and not worry that she's going to go out of compliance, maybe she'd decide to move about 15 million out of this position and distribute it elsewhere within the portfolio. When Sarah is ready to make decisions about where she wants that money to go, she may decide that she first needs to look at some of her risk indicators in her current portfolio. So here we'll go to risk, and we'll take a look at, there are basically three sections here that give our clients an idea of their concentration risk, their credit risk, and interest rate risk. Here with concentration risk, we can see what her exposure is to different countries. So perhaps she doesn't have any foreign currency, maybe it's all US dollar, or maybe she does have some foreign currency, we can track that too. But even if it is all US dollar, a lot of times we find that clients have some foreign exposure because the security was issued in a foreign entity, but in US dollar. So she can quickly drill down from here, and again, this is high level, so I'm gonna just move on to the next item. But if you wanted to get a deeper dive of any of these items, please contact us, and we're happy to go through this with you in a session. So we'll continue on, and Sarah continues to look at her portfolio's credit risk, and she gets an idea of her exposure and distribution of ratings across her portfolio for all Fitch, Moody's, and S&P. And then we have interest rate risk too, which gives her an idea of her duration bands around her portfolio, modified duration and Macaulay duration. And it defaults to 1-year bands, but we can drill down and take a deeper dive and get an idea of maybe 6 months or quarterly or 5-year duration bands. And then we can determine from there what type of security fits our portfolio best. I'll jump over to the accounting menu. And here, this is a very powerful tool. She gets an understanding of the entire portfolio. It's also broken down similarly to what we saw in risk, and we can see our investment holdings, investment income, and cash flows going out into the past. And we'll dive deeper into investment holdings, so let me come back to that. But with investment income, earlier we talked about Sarah was trying to compare period to period and quarter to quarter and so forth. And here she can do that. She gets an idea of what her income looks like this period compared to this period last year, or maybe to the period of the prior quarter, or maybe just the prior period. And if I scroll down, we'll see the investment cash flows going out into the past for here. And we're also working on bringing in things like future cash flows and projections and that sort of thing based on today's portfolio. But from here, she can also get an idea of how much acquisition cost she had for the month, disposal cost, how much income she received, and so on. Let's take a deeper dive into one of these items, and I'm going to choose the investment holdings from here. And Sarah gets really a complete view of her entire portfolio over time, going from the right side of the chart to the left, all right, and it's broken out into different categories, which we see in the accompanying table below. And Sarah has the ability to look at it for the current period. She can go back in time at any time as well. She can also take a look at her portfolio in a accounting basis of statutory accounting or GAAP or tax, whatever is set up in the system. She can filter down to a specific asset manager, and she can filter down to specific security types or countries or other items too, based on the portion of the system that you're going to. Also from here, it's important to note that she can get right down to the details too. She doesn't need to look at just subtotals of each of these categories. And she can also look at her concentrations as well. So let's take a quick peek at that. And here she gets an idea of the distribution of her investments for each asset manager, or maybe an asset class, or for different category types, NAIC designations, just varying ways for her to look at her portfolio. But hopefully you've gotten the idea that she can very quickly look at the entire portfolio and then also drill down to specific items within the portfolio to get a better understanding of what's going on. This also increases communication across departments. So now, rather than Sarah chasing down a particular investment or a particular person that has information on that investment, all of her data has been aggregated into one portfolio, and she can load it up here and get an idea of everything that's going on without having to chase down particular numbers and investments. Okay, so I'm going to jump back over to our presentation. All right. And let's just take a brief view of what happened then and compared to now. So Sarah was looking at dated information. Remember, it took her 2 to 4 weeks to compile all of the data that she needed in that binder. Now, with the business intelligence tool, she's able to get timely insights of her portfolio because it's all loaded up automatically once the accountants are, once they've completed, the portfolio data updates. It might have taken days or weeks to gather all of the data together. Now she's able to view it immediately, and really move closer to analysis versus data gathering. Before, it was a very tedious, cumbersome manual process, and now it's automated. We're taking the data directly from the custodian and other various sources and loading it up so that she can see exactly what's in her portfolio at the latest time. Before, she was only able to view all of her details on a desktop or in sheets that were printed out in binders and things like that. Now she has mobile access. As long as she can access the web, she can walk into the board meeting or into an investment committee meeting with her tablet in hand and get an idea of exactly what's going on within the portfolio as I showed you a moment ago. Before, the numbers were very static. They were on printed out sheets and things like that. Now it's very interactive. She can filter down immediately and she can investigate portions of the portfolio that maybe she didn't have on hand through those binders before. Okay, so it's a very different world for Sarah. Sarah hears about a new board meeting in an hour, and instead of stressing about it, she says, sure, very confidently, I'll be ready. So not only, overall does this significantly reduce the time that it takes for Sarah to prepare for her board reports, but her team no longer has to set weeks aside to gather all of that data for those reports. It's all automated. Her team can now focus on analysis, and that's really our objective, is to help you move to a role where you're doing and performing analysis versus, all of the data gathering. Earlier, John spoke about how 87% of companies spend time compiling reports versus analyzing. And that's what we hope to present to our clients, is the ability to move into that 13% territory where they're really focusing on analysis and making faster decisions for their business versus just data gathering. So she's really eliminated that manual data gathering and consolidation, and she's improved overall accuracy in her reporting. She's gained confidence that the data that's there is correct. She knows that she can rely on the information presented in her dashboards, and now she can take her laptop or tablet with her into board meetings in case she needs to dig into the details of her reports regarding any questions that she's asked during those meetings. She can now also proactively address any concerns in the portfolio with ready access to the information anytime, anywhere. So today, Sarah really is a much happier CFO and more confident in the data that she presents to the board each quarter. And ABC Insurance, their investment portfolio has really never been more compliant and profitable because of her ability to move faster to decisions. So earlier also, Sam told us about the analytics, how there was high importance on analytics for insurance companies in the marketplace today, but low confidence in the data. And that's where we believe that we can help you. We can move you to where you do see analytics as high importance, but that you can also have high confidence that the data that you're receiving is accurate, and you can make informed decisions from there.
Thank you, Greg. So we have gone through a lot of information today, and you might be asking yourself, okay, so what did I learn? Well, we hope that you walk away with a better understanding of how business intelligence and analytics can help you manage risk and ensure compliance in your organization. How business intelligence and analytics can help you better monitor investment activity and also support more informed decision making. These are just a few of the examples of how you can better manage your investment risk and compliance and make better decisions about the business in general with business intelligence. Insurers are facing a number of problems right now that business intelligence can help them solve. And SunGard's iWorks Enterprise Financial couples business intelligence with your data to help you make informed business decisions regarding compliance, risk, and investment. I'd like to thank Sam Stuckel for sharing IT drivers, priorities, and trends with us today. And we'd also like to thank John and Greg for sharing key industry trends and challenges with us, and for showing us how business intelligence and analytics can truly help our listeners reduce uncertainty and manage risk in their investment portfolio. And we'd like to thank you, our audience, for spending time with us today. To learn more about how SunGard can help you tap into the power your information holds, give us a call today. If you already work with us, simply call your account manager. If you're new to SunGard, please call us at 800-337-2677 and select option 2. We'll be happy to discuss your needs and outline a plan to help you reduce uncertainty and more actively manage risk in your investment portfolio. That concludes today's call. Thank you once again for joining us.